Welcome back to the podcast. I am your host, Jonathon Haralson, and this is your Ag Empire. Today, I want to talk a little bit about um, banking. I've had to work with a couple of clients who are having some struggles in getting some stuff refinanced. And what is the common theme? What do we find? Most farmers and ranchers don't have a clear view of their numbers. So you roll into a bank renewal, kind of guessing, kind of speaking in vague talk. Um, the banker's sitting there looking at you, and you feel the pressure. You can just feel that as it enters into your body, and your stress mechanisms kick in. Your armpits are sweaty. You got the shaky voice. You're thinking, is he going to say yes or is he going to say no? And in all reality, if you had your numbers together, because let's face it, I mean, yeah, you may be speaking in generalities, but you know what your cost structure is. You know what your income structure is going to be. You just haven't done a good job of keeping great books. And when I've worked with clients, one of my pet peeves is when we start to speak in generalities. Like if you tell me, "Oh, I've got $600 an acre in it," is it really 600 or is it 678 and 33 cents? Like, let's go through and let's actually take the time to dig through those expenses and let's come up with a true budget. Then let's go back and look at past performance. So if you've got good, clean books, we can go back and we can evaluate, is that a realistic budget? Are you factoring in your fixed cost? A lot of you don't. A lot of you just think it magically shows up there, or you're asking for not enough money and you're going to create a cash flow problem down the road that's going to impact whether or not you can buy or have to move stuff or get yourself pigeonholed where you have to sell the grain or sell the cattle in order to create cash flow, and you end up missing. If you could have held that for one more month or 2 months, the basis would have jumped. Or we get that rally that's outside of the harvest window. This is the tough part in farming and ranching because no one understands it, including the bankers. We are getting into a time in which I've seen there are some wonderful bankers out there that I've had a privilege to work with all over the country. So I know they exist, but there's a lot of them that have no real experience in production agriculture, and they're trying to push you into helping you manage an operation when I mean, let's face it, they're a salaried employee. They've never had to borrow $1 million or $2 million to operate a farm and to make those kind of sizable decisions. It's tough. It is tough, but they are not your business advisor. Okay. They are hired by the bank to do one thing, to shove money out the door and to protect not your interest, but the bank's interest. And that is it in a nutshell. And so I feel like you have got to do a good job on your end to educate that banker. So if we have clear, clean numbers and we can project that, the goal is not to keep your banker in the dark. The goal is to let your banker know, what are your plans for this year? What are some things like factor in something coming in and sideswiping your business, whatever that may be? Come up with that. Have a contingency plan. If you have your banker on board from day one and you educate them enough, you are building the one cheerleader that is going to be there to back you up. And they know you. whenever that board is sitting in that room asking questions. Are there bad bankers out there? Absolutely. Not gonna say there's not. Okay. But you can always pack your business up and leave. You got to remember something. These relationships, some are good, some are bad. And there comes times where even though you've done business for 20 years at that bank, it's time to leave. It is time to find something else. And that shouldn't be an emotional decision. I'm going to give you a good example. I had done business with our bank for many years, and one of my really great friends was high up in that bank. He's the one that got me started, and he and I had a we went to lunch. We had a meeting, and I told him, I said, "Look, I can save 2.5 percentage points on interest, and I get a more favorable term if I will move this. But I'm struggling because you brought me to the dance. I've been faithful to your bank, and you've done great things to help me build my business." And he said, "Look, as your friend and as a banker evaluating what you have going on, that's a business decision. And I 100% support you in moving your business. It only makes sense." And at the time, that was going to save us nearly 40 grand in interest payments. So, look, I know that it gets tough, and I know that we get so locked into doing business a certain way, and it gets comfortable. But it's time for you to break out of that. One reason being that agriculture has been such a volatile industry. Really, I mean, let's just call it the last 6 7 years. Um, Used to, if the market moved 20 cents, 30 cents, like that was big. That was big. Okay. Much less something actually melting down, and we get a 50 or 60 or 70 cent swing in something. Um, but nowadays, we go from extreme profitability. I mean, wealth building profitability in farming and ranching. I mean, let's just face it. We all like to say that we're all going broke, but that in reality, we're cash poor, asset rich. But there are environments in which we can really be up here on the top side of the profitability scale. And then there's also times when we can be on the bottom and losing money. That volatility creates opportunity. And what separates the really good farmers and ranchers, the mediocre, and the ones that are lacking, one is getting uncomfortable with these aspects, creating cash flow, making decisions that are not emotionally based, but legitimately are talked through, are evaluated based on the numbers, having a clear marketing plan that's outlined. And look, I get it. When the market starts to rally, you don't want to miss out on it, and that is okay. All right, but have yourself protected. Do you think that General Motors, Ford Motor Company, Coca Cola, uh, any of the other big companies, Google, Apple, do you think they make rash decisions, or do you think they make very calculated decisions on the numbers? And I'm going to bet that there's not a whole lot of emotional decisions that are made in those times. So for you guys, we've been running it like a mom and pop shop. Maybe you helped out on the farm, and then that farm got transitioned to you. And so you just continue to run it the same way without tweaking any of your operations. You just assume that that's the same old thing that's going to happen. Doesn't matter whether you add a new venture, do anything, but you sell to the same co-op. You do everything exactly the same. It's just somebody else that's pulling the trigger. Okay. There comes a point where if you want to be viable and you want to continue to farm, you've got to make hard decisions. And we get sucked into a vacuum in agriculture that we continue to do exactly what everyone else does, exactly what everyone else continues to do. And so what happens? We all get the same results. We all start losing money. And then that puts stress on the family. It puts stress on your marriage, on your kids, and it's not good. It's not good. And you end up in this deep dark pit of downward spiral where you just don't really enjoy farming and ranching like you used to. So, I encourage you, get your numbers right. Have a marketing plan and price inputs. You know, one thing that we've looked at, um, I would say out of our clients, we have had several this past year when inputs got so high that we found mistakes in billing from your chemical, seed, and fertilizer suppliers. And I'm not talking little money. I'm talking between thirty and $70,000 swings in billings. And I think it's important that you have a system in place to where you can check that off. One producer, if he hadn't had a picture of him returning a pallet, they wouldn't have honored that. And he would have been out the 30 something thousand dollars. So sometimes having a system in place that can protect you could save your bottom line. And I know that it's tough and you just want to farm and ranch. You don't want to mess with all this stuff and it seems like overkill. But it's a difference in who's going to survive and who's not. And it's time. It's time. We've got a network of folks here from all over the country that we work with. We try to help them in all aspects of their business. We've got different levels that you can join up, but you've got to have people that are fighting for you. You've got to be able to have somebody that can help you do things different. You need a catalyst that's going to spark that change deep inside because you've proven it. You've proven that you're not going to change. You continue to do the same thing, expecting a different outcome, and it's not going to happen. It's not going to happen. So I really encourage you as we move forward to check us out at www.youragempire.com. And I want you to know that there are folks out there that care about your success. There are ways to alleviate the pain and suffering that you feel as you go out and you get these bank renewals and you start your farming for 2024 or 2025. You have got to have a plan in place. And you've got to be able to execute that plan. Because I'm going to tell you, we can talk about break evens all day long. We can set targets up. And as those targets hit, if you don't execute the plan, you will see failure. You will see failure. Everything's changing. And we're kind of going back towards a model where the 1980s was a struggle for a lot of folks in the farming sector. And the one thing that I've seen, and I think it's the canary in the coal mine. I put it in our newsletter this past week, but working capital. Working capital is being pulled back on operations that are extremely profitable. Um, you start to see they have their operating note they've had for the last 10 years. It's been the same dollar amount. They've actually expanded the operation, but yet kept the operating note the same. And banks are coming back and saying, "Hey, we're gonna back you up 20%. We're only gonna give you 700 or 800,000 in operating, um, but you're working more ground than you were 10 years ago when that was originally set up." So, what was the justification there? Obviously, the bank viewed you as a bigger risk than you were 2 years ago, 3 years ago, 5 years ago. And I'm telling you, when Bloomberg kicked out that article about how tough it was going to be in the farm economy this year, bankers from all over started to ratchet back for no reason. You may be extremely profitable. You may have a wonderful cash position. You have a lot of equity in your. I actually looked at a guy that he was 28% on his loan to value ratio. 28%. The guy had a couple hundred grand in cash, and yet the bank still pulled back his operating note by nearly $250,000. Now, you and I both know he made it work last year when the inputs were extremely high and cash flow was tight, but he made it work. He was still profitable. And this year, he's sitting here staring down a decrease in his operating, and he'll make it work. He will. But did he do enough to educate that banker on what his needs were? Or did he just count on that phone call when that banker said, "Hey, we're backing you up"? He didn't have the ammunition to go to that banker and say, "Hey, here's why I need that $1 million operating note. This is why I need X, Y, and Z." And if he had the numbers to back it up in a clear, concise report, you got to remember these bankers are not the evil guys on the other side. You have got to formulate a relationship with that banker to make sure that he is your biggest cheerleader. And a lot of you don't do it. A lot of you are scared to communicate with them. A lot of you come in with no financials, and no balance sheet. You write out some half-hearted stuff, and you wonder why the guy's mean to you, or you feel awkward about that transaction between you two. We've got to be able to play ball with them in their space. You see, the banking industry has changed in the last 5 years, and it has become tougher, especially when you start evaluating what agriculture looks like compared to the rest of their book of business. And over time, I think it's only going to get tougher. And the disparity between agricultural lending institutions and regional banks that have very little, I think that gap is going to be huge. So you want to make sure that you're operating out of integrity. You want to make sure that you have a clear and concise reporting structure that you can tell them, explain what your contingency plans are. They've got to build that relationship, that trust factor with you. I'm going to give you another one. Are you gritty enough? Are you gritty enough that whatever you tell them, you're going to do? Even if the plan goes sideways, you're able to fulfill your obligation. Because I can tell you, my banker understood that hell or high water, whatever I signed off on, I would take care of him. He would not lose his job because I did not take care of business. And that's huge. I would venture that a lot of bankers out there are a little queasy to go out and loan all this money to farmers and ranchers. We're highly leveraged. They don't understand the government programs as far as any kind of safety net. They don't understand the dollars at risk. We don't do a good job of teaching them as far as how the crop insurance is set up and what kind of price structures we have. We don't explain our risk management plan to them clearly so that they see that we're not as big a risk as it looks like. That's on us. That's our problem. But I know you're wearing multiple hats and you look back 20 years, your dad and your grandfather uh, probably weren't farming as many acres as you are now. So you, as an individual, as a manager of this farm, you've got a much, much bigger plate to deal with. You're dealing with bigger dollars, but yet you're so wrapped up in the production side of it, the tractor driving, the gathering cattle, that you don't keep a good handle on the business side of things. That's why I think you need someone like ourselves. You've built this empire, and it's time for us to protect it. And that's why we built Empire Ag. So I'm going to leave you with this: take time, invest in yourself, and hire others that are there for you. Guys, reach out if you need anything. Book a call with me. It doesn't cost you anything to book a call. I would love to visit with you about your operation and see. And I will tell you, I turn down folks all the time. If you are not a fit for us, we're not going to just take your money and let you work with us. I don't want that. I don't want to. You've got to be in the mindset for change, and you got to be ready and willing to do what it takes to get you to the next level. So reach out. We'd love to hear from you. With that, we'll call it good. That's it for today on your Ag Empire podcast. Please reach out and subscribe wherever you are streaming. Guys, like and subscribe. Help us build this platform even bigger so we can continue to help farmers and ranchers all over the country and possibly even globally.